So does student loan debt have you as baffled as me? It's almost as hard to figure out the student loan payment as it is to figure out what kind of insurance plan you want to take. So in today's video, what I want to prep you guys for is a live event that we're having this week. Actually, it is tomorrow, with a young lady who started a company because of just this. Her student loan payments were disqualifying her from making or being able to buy a home. So she reached out, and actually, what did she do? Well, she didn't put her head in the sand and complain about it or victimize herself. She did something, and she started a company to help you guys out there figure this all out. So what I want to introduce right now is a tool that we're offering you guys, and we're going to go through this actually on a live event that we're having tomorrow, which is Wednesday the 21st, June 21st. Please join us, because if you have student loan debt, I don't care if you're looking to buy a house, if you have student loan debt, this is very important. So it's official, folks. Student loan payments are going to restart again in October. So if you're one of those ones that haven't been making payments for years and years and years, and you're like, oh my God, now what am I going to do that my student loan payments are going to be kicking in? I'm already having a tough time making ends meet. What do I do? Well, we might have the solution for you. So let me introduce this concept to you. Wonder if you could go through and figure out what payment plan on your student loan payment plan is best for you. You probably don't even know that there's this many options. So let's go through it. You go through here and you go to the federal student loan aid, and you go through here, and let's just look at the complications behind this. So if you got a student loan debt and you need to make payments back, how do you do it? Well, do you go with the standard repayment plan? Or do you continue down through here and go with the graduated payment plan? Or do you keep going down here and go with the extended repayment plan? Or do you continue down through and hit the revised as you earn pay plan? Or you can pick the plan such as pay as you earn payment plan. Then you can check from one of these, if you're maybe eligible, income-based payment plan. And if you're not qualified with that, maybe you now qualify for the income contingency repayment plan. And folks, there's more of these things. So how do you figure this stuff out? Well, check out this tool that Catalina just made. And please join us at tomorrow's live event. And I don't care if you're buying a house. If you have student loan debt, this is for you. So what happens here is you don't know which payment plan to keep on. Most people, as soon as the payments plans kick back in, they're just like, okay, my payments are going to start again. They don't realize they have options. So let's use this tool that Catalina provides us. And I'm going to give you a link to this, because you could do it on your own. It's a company called LoanSense. So let's see what they do. Basically, they're going to put all these plans in context to figure out how much can you save by maybe choosing one of these programs over the other. So let's put in here. Let's say, for example, you have a borrower out here, and we had this example, and it's an extreme example. Let me throw it in there. We just closed on a doctor who makes $75,000 a year. And you might say, Dan, that seems a little off. Well, they just graduated from med school. Okay, so they're in their internship or whatever, and they're making $75,000. But this person had $350,000 in student loan debt. So I know, guys, this is an extreme, but I'll do a simpler model here in a second. So $350,000. She had a car payment of $350. She was a mother and a wife, and she has 3 children. So there's 5 people in her family. So she had minimum credit card payments of $350. I think she had a car payment of, let's say, $350 as well. And then other loans, let's say it's $100. Okay, so that's that. Most of the plans, most of the mortgage programs, when you're qualifying for a loan, what they do is they take the balance of your student loan debt, and they equate out and figure out, what would the payment be if you had to make a 1% payment? So in most mortgage programs, you have to qualify with a 1% of your student loan balance being your payment. Or some government programs allow 0.5% or 0.5%, but most programs require 1 full percent. Okay, so in this case, this person would have a $300 or $3,500 student loan payment based on the mortgage guidelines. Okay, so we plugged in her data, then we go down through here, and her rates, most of the student loan debt is at 6.5, and it's her husband, and 3 kids. Yes, guys, this is a true story. You put in 5. Now let's see, does this work? How much could she save? What would her monthly payments be? Holy shnikes. So in this case, based on one of these payment programs that are eligible through this, she was able to, or she can, cut her monthly payments by $3,732. In this case, she was being put on the income-based payment plan. So you might qualify for that, or you might qualify for one of these others. This is what this whole system does for you. And up to this point, it's all free. If you want their help, their assistance, picking maybe even additional plans that are available to you, filing the paperwork and everything else you want them to do, it's pretty simple. The cost is less than $250, and they're able to help you out there in regards to your student loan payments. So I just wanted to introduce this to you, the concept at least, and then give you the tools on what you're going to need to do with this. So what I ask you to do is please join us tomorrow, which is June 21st at 7 p.m. Eastern time for our live session with Catalina, the president, CEO, and founder of MyLoanSense. So hope to see you there, folks. And I hope you find value in my channels, because that's my whole goal for you guys out there. So take care. See you tomorrow, folks. Bye-bye.